More than 28 million people must now begin paying their student loans back.
President Biden has taken many paths to try to fulfill his campaign promises to cancel student debt.
President Biden is canceling an additional $9 billion in student loans.
Have you recently received an email like this? Or maybe even like this? And wondering what to do about them? Today we dive into student loan repayment and the various options and plans available to you to help you navigate once and for all paying off your student loans. Student loan repayment is a very stressful and anxiety-inducing topic for a lot of people, including myself, which is why I wanted to make a video about how to finally get ahead and explore and choose the various options and plans that are available to us to tackle paying down and ultimately off our student loans. So if you're feeling overwhelmed, you're not alone. In today's video, I'm going to show you 6 steps to finally help you feel more confident and comfortable when it comes to navigating paying off your student loans. Before we get to that, I want to reintroduce myself. I'm Dr. Chantel. I completed 8 years of college and higher education while still growing and navigating through my career, figuring out my path and next steps. I went through my undergrad, master's, and accelerated doctorate program without any breaks in between. So the goal of this channel is simple. It's to help you feel comfortable when it comes to life post-college. All right, so feel free to grab a pen and a paper. Let's dive into student loan repayment. All right, step 1 is to understand the type of student loans that you've borrowed. Because before you get on a repayment plan, you have to know what type of student loans you have. Student loans are broken up into 2 categories: private versus federal student loans. So federal student loans are issued by the federal government and come with a wide range of options, which we'll get into. Federal loans may offer things like forgiveness options like public service forgiveness or PSLF or teacher loan forgiveness. Private loans are loans that are issued by a private lender like a bank or a credit union and often have more rigid repayment options, but they typically offer lower interest rates, but you will not qualify for any kind of federal student loan forgiveness programs that may come with your federal student loan. So private student loans may offer you some benefits of having lower interest rates, but their student repayment plans are going to be more rigid and not as flexible as federal loans. Have you ever heard of Sally Mae? Well, yes, that's her. Private student loan. In this video, I'm going to focus more on federal student loans, but if you do have private student loans, I encourage you to reach out to your lender to explore your various options that might be available to you there. So to identify what student loans you have, you need to log into studentaid.gov, which is basically the federal student loan hub. Or if you've never logged in before, you will need to log in for the first time, obviously, and create an account. From there, you'll visit your account dashboard, which will display your loan servicers. Or you can call the Federal Student Aid Information Center, but do you really want to stay on hold for hours? All right, now that you know what student loan you have and who is servicing them, step 2 is to choose the best repayment option for you. Now, there is no one size fits all when it comes to your repayment plan or your repayment option. You will need to pick the option that works best for you based on your specific circumstances. The first plan is the standard repayment plan. Under this plan, borrowers make fixed monthly payments over a 10-year period. This is the default plan for most federal student loans and is the basic plan for repayment. This plan has 120 payments that are the same each month for 10 years. The payments on this plan are large than other plans because the goal of this plan is to make sure that you pay more monthly but will accrue less interest over time. This plan is right for you if you can afford the monthly payments and if you want to pay less in interest. The second plan is the graduated repayment plan. This plan lowers the monthly payment but increases it every 2 years. So this plan is similar to the standard repayment plan in that it has 120 payments over 10 years, but this plan has payments that start small and can substantially increase every 2 years. So this plan is right for you if you want smaller payments initially but earn too much income for income-driven repayment plan or IDR. An IDR is best for you if you're having difficulty paying the monthly payment and need something with a little bit more flexibility and manageable. Do keep in mind that they typically require you to update your income every year. So if your income situation changes, you'll need to make sure that your servicer knows of those updates. IDRs will also extend your repayment to 20 or 25 years. When the term is over, however, you can get income-driven loan forgiveness. 4 types of IDR plans, which I'm not going to cover in today's video, but I encourage you to reach out to your loan servicer to see which plan makes the most sense for you and apply for one that you think would make the most sense for your situation. Finally, the extended plan starts low, but then increases every 2 years for a total of 25 years. Or you can choose the fixed option, which splits your payments evenly over those 25 years. Keep in mind, this plan will result in more interest over time. I'm not going to say this is the best option to choose due to paying that interest over time, which, as we know, accumulates. If you don't want to go this route, I'd recommend going for one of those income-driven repayment plans because the payments shouldn't rise above what you can afford on one of those plans. However, with the extended repayment plan, it could increase every 2 years, which may outpace your income. So if your income is not increasing, well, you could end up owing much more than you can pay at the time, which is never a good situation. So a caveat with this plan, though, is that you must owe over $30,000 in federal student loans to qualify. So I'm going to throw this in, which is to research loan forgiveness programs. So I'm going to throw this in there, which is to explore student loan forgiveness programs. So as I mentioned earlier, certain careers such as teaching, nursing, or public service may qualify for loan forgiveness. Explore these programs to see if you qualify or are eligible, even in the slightest way. Check with your servicer to see if you would qualify for any of the career or PSLF student loan forgiveness. I know that in some states, there are programs around purchasing a home in that state where if you buy a home within the state, they will forgive your student loans up to a certain amount. I know that Maryland currently has a program right now where if you purchase a home in Maryland, the Maryland state government will forgive your student loans up to a certain point. But there's several of these programs. Some have different terms and stipulations, of course. But if you think that you may qualify for any of these, I definitely encourage you to look into it and to contact your servicer for more information. Step 4 is to consider loan consolidation or refinancing. Consolidating your loans into one could simplify your repayment process and potentially lower your monthly payment. So work with your loan servicer if you think that this might be the best course of action for you. On the refinancing side, private lenders can potentially offer you lower interest rates, which could save you more money in the long run, but you should definitely weigh the pros and cons of consolidation and refinancing. I know that if you choose to refinance, as I said earlier, when it comes to taking a federal student loan and then turn it into a private student loan, you will lose out on any of the federal government student loan forgiveness programs, and you will be stuck with the private lender that refinance your loans. Definitely take into consideration and weigh what is best for your situation, but consolidation and refinancing are 2 very valuable and viable options that may make sense for your situation. All right, step 5 is to communicate with your loan servicer. Maintaining communication with your loan servicer is so important, especially if your financial situation changes. You're going to want to make sure that they have the most updated information and that you are transparent and honest with them about how much you can pay each month and what arrangements you can work out. There are oftentimes different plans or different terms that they will help you come up with to be able to at least pay some each month. But if you're not communicating with them, they're not going to know how best to help you in your situation. So make sure that you're staying in communication with your loan servicer, especially if your income or your financial situation changes. All right, step 6 is to make a plan and take action. So now that you know which plan might be best for you, you've looked at the repayment options and you've selected a plan, you've spoken with your loan servicer. The final plan is to make a plan and take action. I know it's very easy to bury your head in the sand and blame the government and get all angry and upset, but at the end of the day, the work starts with you. And so what you do with the information in this video is up to you, but the best thing you can do is to actually know what kind of student loans you have and begin to make a plan and take action on that plan. So getting on a plan looks like making a budget that outlines your income, income minus your expenses each month and how much of that can be allocated to your student loans. I know that there are several great YouTubers in the personal finance space, some that I enjoy watching, that talk about how to make a budget, how to live within your means, and how to finally accommodate your student loans since they are now in repayment for the majority of people. So if that's your thing, you can definitely peruse YouTube. There's several great voices out there in that space. But regardless, seek additional help if necessary. There are also several good budgeting apps out there that can really help you if you like to keep your budget on your phone or in a digital format. Apps like Mint, Rocket Money, YNAB, and more are really great to help keep your account connected to your phone. Every time you swipe your card, it's going to show in the app and notify you. So that's a great way to do it digitally as well. Or even an old-fashioned spreadsheet can do the trick. But the main thing is that you want to make sure you're tracking this each month to see how much of your monthly income and budget can go toward student loan repayment. So to recap, you want to make sure that you assess your situation and actually know what student loans you have. There are people who go literally years while interest accrues without knowing what kind of student loans they have and what they need to begin repaying. So make sure that you aren't one of those people, that you actually take the time to log in or create an account on studentaid.gov and to begin forming a plan about what to do around student loans. Look at refinancing or consolidation. Look at the student loan forgiveness programs that might be available to you and take advantage of ones that might be best for your situation. Getting on top of your student loans is possible, and it starts with you. If you found this video helpful, please consider liking and subscribing for more helpful tips about how to navigate life post-college with more ease and confidence and less stress. Place any comments down below and questions you might have. As always, thanks for watching. I'll catch you in the next one, and good luck with your student loan repayment.